good afternoon, good evening, whatever time that you are seeing this. My name is Chris Elliott with Remax Action Real Estate, coming at you today with our state of the market update for Monday, April the 6th, or this is being recorded Monday, April the 6th. You're more than likely getting it Tuesday, April the 7th. As we're doing with everything, time stamping this just because the world can change in a day's notice, as we are seeing. So this information, to the best of our knowledge, is good and current up to today. So we're going to give you a quick update on the national news as well as the local real estate news, given everything that is going on right now. So as most of y'all are aware, we'll address the elephant in the room. A lot of economists, a lot of experts are agreeing that we are already in a recession. So I'm going to define recession. The economic definition of recession is 2 consecutive quarters of negative GDP growth. So recession does not necessarily equal 2008. It's just 2 consecutive quarters of negative GDP growth. We entered into the pandemic and the kind of shutdown, partial shutdown, in the end of March. So we kind of dipped into a recession in the month of March, and everybody's agreeing that the second quarter is going to be very, very interesting and kind of a little ugly on a national scale. So the good news is the silver lining. Goldman Sachs, JP Morgan, Morgan Stanley all agree that this is going to be a V-type recession or a V-type recovery, meaning that we're going to kind of hit bottom in the second quarter in the next April, May, June, and that we're going to be bouncing back up in the month of, or going into the third quarter, and then it's going to be a very robust bounce back of the economy, which is very, very good news. Keep in mind, we had a very strong economy going into the pandemic, and there was an organized shutdown of the United States economy, given social distancing and everything that needed to happen. So that's kind of what put us into it, but we had strong economic fundamentals going into this recession, which is good news, and why they're predicting that it should bounce back very robustly. PricewaterhouseCoopers did a survey of 50 leaders from a cross-section of industries, asking them, hey, if COVID-19 were to end today, how long would it take your company to get back to business as usual? 66% of leaders, CEOs, said that within less than a month they can get back to business as normal. And then 90%, so that includes that 66%, so it's not 66 plus 90, but 90% of leaders surveyed said that within 1 to 3 months, they can get back to business as usual. So that is why, in my opinion, economists and experts are predicting that this is going to be a pretty robust bounce back, and that we're going to be able to get back to a strong economy once the pandemic, once the virus is under control. All right, so we also have to remind you, and if you've been watching our stuff, you've seen this slide many times before, but a recession does not necessarily equal home value depreciation, or another way to say that, a recession does not necessarily equal home prices going down, which is very good news for anybody that is a homeowner or looking to sell a home. So in only 2 of the last 5 recessions did home values go down. Now, everybody's got a little bit of PTSD from 2008, where home values dropped nearly 20% on a national scale. What we have to remember about the Great Recession of 2008 is that the housing industry is what got us into trouble. So there was a lot of funny stuff going on, from easy credit to bad loans to overbuilding, that led us into that. And the housing market was what kind of pulled us all into that recession. So that is why the values fell off very much in that. But the only other time, or in the last 5 recessions, that we've had negative home prices was in 1991, and they only dropped about 2%. But in 3 of the last 5 recessions, home values have continued to appreciate through a recession. So keep that in mind. Experts are saying, and it's playing out with early evidence, that this is going to be more of a 9/11 type recession, in which that the fundamentals of the economy did not falter, but something outside kind of influence the economy, which obviously is what is happening with this pandemic. During that time, the S&P dropped about 45%. To my knowledge, it's dropped about 30% as of the date of this recording. But during those times, the 3 years, 2000, 2001, 2002, home values continue to appreciate, and continue to appreciate at pretty good clips. So at least what we're seeing in the market, we have not seen values decline. Hard to tell if they've necessarily appreciated, but we haven't seen major price cuts. We haven't seen crazy negotiations. So worst case scenario, I think values are at least holding right now during what we're experiencing, which is good news. Also, something to keep in mind, unemployment. So, a headline that just came out in the last day or two is there are now 10 million Americans that are out of work, which is a very serious number. We don't downplay that, but we also want to point out that unemployment rates and home sales don't necessarily have a direct relationship. So as you can see, the yellow line shows you the unemployment rate over the last 30 years. Yeah, 30 years. And then the number of home sales is in the blue. So as you can see, they don't necessarily correlate. Unemployment did go up 2008 to 2011, and home prices went down. But lending standards also tightened up significantly after the housing crash with a lot of laws that were put into place. So that's kind of the explanation of this little section of time right here. But as you can see, otherwise, home sales and unemployment rate kind of move independently of each other. So just pointing that out. All right, so what are we actually seeing in the market? So I've been keeping track of the numbers for the last 4 weeks. As you can see, and this is somewhat of a confusing graph, but the blue is the week of, so we're going from Thursdays to Wednesdays, which is kind of a real estate week. The blue was March the 5th through March the 11th. Red is March the 12th through March the 18th. Yellow is March the 19th through March the 25th. And green is March the 26th through April the 1st. So as you can see, coming soon listings, those have kind of stayed steady. The amount of activated listings, new listings hitting the market, has kind of stayed steady or hasn't dropped significantly. We have seen the amount of transactions that are going under contract to decline week over week. But what we need to realize is that in this last week, we still had 365 properties that went under contract. So there's still plenty of homes that are selling. Yes, the numbers are declining. My assumption, and it's kind of hard to tell this early, but my assumption is being that we normally see an uptick in inventory. So we normally see the amount of available homes hitting the market go up at this time of year. Spring's kind of when everybody lists their home. So we haven't necessarily seen that. The amount of inventory has stayed level, but we also have had a certain number of sellers that have either pulled themselves off the market or have hit the pause button and have not gone onto the market. So that's my explanation, or that's kind of my feelings behind the pending listings. We're also seeing a tightening up of the market. So homes are still selling for good prices, and we're still seeing multiple offer situations on a lot of properties. But I think sellers are not able to get away with the things that they were able to get away with, maybe a month ago. And we'll talk about that more in detail. The number of closed transactions has continued to stay steady, and it spiked this last week, which is phenomenal. So transactions are still closing out. And then we talked about it, the temp withdrawn properties spiked up a little bit. Looks like that's coming down a little bit. And the number of release properties has stayed somewhat steady. So temp withdrawn and release are both, sellers pulling their homes off the market voluntarily. So what are we seeing on the front lines? So as I alluded to earlier, we've seen more sellers drop out of the market or have not entered the market, meaning they were planning on going, listing their homes on the market, but they kind of pulled back a little bit, versus buyers dropping out of the market or not entering. We're not necessarily seeing as much concern from buyers. So, and it somewhat makes sense, and I empathize with it. We've got seller clients that are just saying, or sellers in general, that are saying, hey, I don't necessarily want people in my home, touching things or opening up. We're doing what we can to alleviate those fears, but totally understand if that's still a concern for folks out there. That does not seem to be a concern with buyers. Buyers don't seem necessarily concerned with, going into other people's homes, looking at homes. Buyers are doing more and more research online before they go out to see a property in person, but we have not seen buyer demand necessarily drop off in this market. Like I mentioned, we're seeing more and more multiple offer situations. So I honestly think, just based on kind of what I'm seeing and conversations that I'm having with both clients and other agents, and nobody believes me when I say this, I think it's become more of a seller's market now than it was even before, because we've had sellers that have pulled themselves out of the game, so to speak, but the buyer demand has not slowed down. So if buyer demand continues at the same rate and there's less homes now that are on the market, it becomes more and more of a dogfight, or more and more of more and more competitive on those listings that do remain on the market. We're seeing less showings, but all of the major internet portals, Zillow, Realtor.com, Trulia, Homes.com, a lot of the vendors that provide agents, search websites, they are all saying that they are seeing the amount of time, portal time that folks are spending on these websites. So in other words, not just the amount of times they're going to the website, but the amount of clock time that they're spending looking at properties online has gone up, probably because they're not being as productive as work. But I think what it is too is folks are doing more and more research before they actually leave their homes to go see a property in person on these search portals. Properties that are not marketed well are now paying for it. So what do I mean by this? We were in a market, for the last 3 years up until about last month, where a lot of sellers could get away with poor marketing, not having good details in the multiple listing service, not hiring agents that knew what they're doing, or listing the property themselves and just slapping it up on Zillow, and not really marketing properties well. And they were able to get away with it. I don't think they were necessarily netting the most out of their sales that they could have, but they were able to still sell, because at the end of the day, it was a hot market, inventory was low, demand was high, and buyers just said, you know what, this property looks terrible online, but why don't we go see it? And maybe when they got there, the property looked better in person than it did before. But as I mentioned, folks are qualifying properties online before they go to see them. So I think everybody and anybody, is kind of wants to limit the amount of exposure they have to this virus. So if they can pre-qualify or rule a property out before they go see it in person, they're doing that. They're doing it virtual tours. They're looking at descriptions and details, more detailed than they were before. They're looking at pictures. They're basically making decisions on whether or not they want to see the property before they leave their house. So if your property is not marketed well in this market, if it doesn't show well online, so to speak, you're going to pay for it in the amount of showings you get, and ultimately the offer that you don't get, or the price that you're able to get on your property. So now more than ever, video tours are important, professional photos are important, staging a property well before you hit the market, and filling out full MLS details, rooms, room descriptions, measurements, things of that nature, just so somebody can make a decision before they come out and see your property, whether or not they even want to see it. All right, so all that being said, what is our advice to our seller clients right now? If they are not comfortable with listing at this time, it is okay. We've said this in videos before. We are not pressuring anybody to do anything that they don't want to do or they're not comfortable with doing. But that being said, we still have some clients, or we still have a fair amount of clients that either need to sell right now, or they just want to continue forward. They don't want to put their lives on hold. So for those clients, we're providing COVID safety kits. So at our listings, we're providing Clorox wipes, gloves. We've had a little bit of a trouble getting a hold of those, but we're getting more and more. And then express instructions to both buyers and buyers agents of how we're going to facilitate showing. So essentially what we're telling agents, if they're showing our listings, of hey, get there a little bit early, take a Clorox wipe, open any doors your clients are going to need open, turn on the lights if they're not already on, use the Clorox wipe. And hey, when your clients get there, please tell them to keep their hands in their pockets, to not touch anything. And if something ends up having to be touched or gets touched, please use that Clorox wipe to wipe it off, just so we're keeping ourselves, our clients safe, and then also any prospective buyers know that they're, that we're practicing safety. So it gives them assurance as well when they're going in that home, that we're all practicing safe real estate. As we mentioned, we've always done video tours. They're getting more and more prevalent and more important. So those are still there. We're offering virtual showings. So if there's any prospective buyers that want to kind of see the property before they see the property, we're encouraging them to look at the video tour. But if they need us to, we're more than happy to go out to a property, do a virtual showing via Skype, via FaceTime, via Facebook Messenger, and do that just so folks feel comfortable or they're able to make a decision and they're enticed to go actually see a property in person. And then we're upping our social media marketing just because it's more important now than ever that we can get the property in front of people through other means. Obviously, you can't do open houses right now. Can't do a lot of traditional marketing that we've been able to do before. but folks, along with internet time, are spending more and more time on social media during this time. So those ads we're seeing more and more effective during this time. As we talked about, proper stagings and property preparation are more critical now than ever. So if your property doesn't look good, if it doesn't speak to somebody online, more than likely that buyer's just not going to come out to look at it in person. So that's always been the case, but it's even more so the case with the times that we're living in. Not necessarily a great time to overprice. We talked about it. We're not seeing homes, values depreciate. We're not seeing folks having to, cut their home prices. But, I don't think this is necessarily the market that you want to just go after this super ambitious price where there's no comparables to justify it. I just don't think you're helping yourself given the situation. You might have been in a situation before where people would still come out and look at the home. We're seeing that kind of go away. So not a great time to overprice your home. And what we're doing, just given the economic situation that we're in, we're confirming that buyers are well qualified, working with a competent lender, and employment with solid footing. So number one, have they been scrubbed and screened properly by their lender? Are they working with a lender that knows what the heck they're doing? Making sure preferably they're working with a local lender. And do they have employment with solid footing? So, are they in the hotel industry? Are they in the food and beverage industry? Are they in an industry and are they in a job that's going to be there for the foreseeable future? So all relevant questions in the market that we're in. All right, so what is our advice to buyers? If you are not comfortable buying right now, it's 100% okay with us. But once again, we have clients that either want to move forward or have to move forward given their situation. So if you've been pre-approved before, I recommend that you confirm your financing with your lender. There's been a lot of shakeup in the mortgage industry over the last 2 weeks, a lot of things going on. A lot of standards have been raised as far as what it takes to qualify for a mortgage. So if you've been pre-qualified before, I recommend just reaching out to your lender and just confirming that you're still good to go. If your job is at risk, if your industry is at risk, you might want to hit the pause button. If you've got a job that could potentially not be there in a month or two, or you're in an industry that is set to have a big impact by what's going on, I wouldn't blame you for holding off. I think you're wise to kind of hold off at this time. COVID safety. So once again, gloves and Clorox wipes on any and all of our showings, just to make sure our clientele are staying safe, as well as keeping the seller safe and being responsible in that aspect. Like we've mentioned before, we are recommending our clients to do more research ahead of time and narrow their showing. So, before, folks may have seen properties that were questionable, or they just said, hey, let's just throw it on the list. Let's go and see it while we're out. We do recommend that we limit the number of showings that we're going on just to reduce exposure to the virus. And hey, let's not waste our time with properties that probably don't match our criteria. And you're still going to need to act quickly, and I wouldn't be surprised if you end up in a competitive situation. As I've mentioned, buyer demand has not really fallen off at all, but what we have seen is a lot of sellers pull back. So with less inventory on the market, with demand being as strong as it is, there's a good chance you can be fighting for a property against another prospective buyer. So you still need to jump on properties quickly, and just realize you might still be in a competitive situation on that. And then keep in mind that the coronavirus doesn't necessarily equal fire sale. So I think we've seen some buyers that have felt like, hey, given the situation, given what's going on, I could just come in here with a super low ball offer, and the sellers are going to be scared and they're going to take it. We're not seeing that's really working in the market that we're in. That could change in a month. But as of right now, we're not necessarily seeing fire sales. We're not seeing anybody just let go of their property, so to speak. So just be mindful of that. So that is my 2 cents. That is our market update for today, April the 6th. If you have any particular questions or concerns that may pertain to your particular situation, if there's anything I covered that you want me to expand on or clarify, feel free to call or text me. That's my direct line right there. You can email me at chris@chriselliottrealestate.com. I appreciate y'all's time. I appreciate you tuning in, and we look forward to seeing you on the next video.